I think like frankly, we've kind of been revenue funded from the start. So I think a lot of companies, a lot of like zombie foundation, BVI structure guys are running headfirst into the revenue meta on one hand, which just means like VCs don't have capital to deploy. So when retail is the buyer, retail generally wants fundamentals. But it's like, there's not a lot of capital sloshing around. We can't dump a bunch of tokens to fund one way. We need to go hard and try to ship product. This happened in 2022 and 2023. You saw like the Graph and Gnosis and all these kind of big zombie co's launching side projects. Same with Chainlink, incubating and launching stuff with some of the research they did in house. Obviously, they don't advertise it, but it was done at a pretty enormous scale. And a lot of that is just like you can't just dump tokens anymore. So they're starting to have to operate like real companies. Obviously, like not everybody, but that's just what we're seeing more of. And a lot of developers kind of got taken off the market by like total vaporware, like nothing burgers. So much time and energy going into developing EIPs that will never in a million years make it to production, or developing like, the next AI blockchain or whatever, thing got a bunch of funding. So I think it's a mixture of like reality setting in, people not able to raise new rounds. But I would say like now that Ethereum is going up, usually like when Bitcoin pumps, nothing happens. Like the industry doesn't make any money. Developers aren't getting jobs. Like when Bitcoin spent the past couple of years pumping while Ethereum was in the gutter, it was like a freaking depression in Ethereum engineering and VC. But now that people, ETH holders are making money, we might see kind of even more of a resurgence. But I think this first wave that we're seeing is just like, people realizing they can't really skate by on these giga treasury war chests that were raised in 2021 and 2020.